Start. Good morning, everybody. Welcome to this Sistr session on perfect pitching. So I'm Emma Hardcastle. I work for Sistr, and I'm joined here by the wonderful Julia Elliott Brown. She is a pitching guru, and she knows from doing her own stuff as well as helping lots and lots of her female entrepreneurial clients raise investment for their own businesses through Enter the Arena. She absolutely knows her stuff. So if you've got any questions, please get involved in the chat app right from the beginning. We'll try and answer as many as we can throughout at the end of the session, we're going to do it. And it's a great time for you to sort of say what it is that you're doing in your business as well, and we can all help each other on this session too. So I will hand over to the lovely Julia and say, take it away. Very keen to hear about the session.
Thank you very much, Emma. It's lovely well, I'd love to say it's lovely to see you all, but I can't see any of you. But welcome to the session. So this is all about perfect pitching and with respect to looking to investors to get some funding to help you grow your business. So obviously we've had that lovely introduction from Emma, but let me tell you a bit more about myself. So Julia Elliott Brown. My company is called Enter the Arena, and we partner with Sistr, so helping Sistr with anything to do with kind of raising investment, pitching, that kind of stuff. And so I've been in the startup industry for about 25 years, which makes me feel really old. I'm a serial entrepreneur, and I've been involved in starting, building, funding and scaling a number of different businesses myself. So I know what it's like to be in your shoes as an entrepreneur, thinking about how you raise money to grow your business. And 5 years ago, I set up Enter the Arena, which is a company that provides coaching and advisory services for female founders, helping you to get your businesses ready for investment, helping you to raise investment, and then scale beyond that. So that's my passion, my focus is all about helping female founders like you. And so what we're going to cover today, we'll talk about what a pitch deck is for, because I think there's sometimes a bit of confusion over that actually. What are investors looking for? And that's really important, even if you're right at the beginning of your journey, just with an idea or starting to build your business. Having a sense for what investors are looking for is really helpful as you go forward to create your business. How to hook people's interest, particularly investors who have quite a short attention span. What your pitch deck will do for you, it's much more than just explaining about what your business is. It does so much for you. The things that investors really want to know. What are the bits and pieces about your business that investors need to know about to assess whether you and your business are a good investment opportunity? Storytelling. So when you're talking about your business and pitching, how do you tell a story? A couple of bits and pieces on design, when you're thinking about how you design any kind of pitch deck that you're doing. And then we're going to end up by just really talking about what else do you need to think about for fundraising, because it's not just about your pitch deck. There's so much more to think about if you want to be successful at raising investment. So lots to get through. I want to hear all your questions at the end, so please kind of make, I'm sure we're going to share this after, so you don't need to make lots of notes, but make some notes on the questions you'd like to ask, because I really want to get the discussion going. Right, first things first. I know we called this presentation Perfect Pitching, but frankly, that's a load of bollocks, because there is no such thing as a perfect pitch. So I get asked this all the time. People say, can you just send me a template for a perfect pitch deck? And I'll just work with that. I'm like, there's no such thing. So when people talk about pitching, it's different from a pitch deck. So an investor pitch is actually a conversation. So when you're pitching, it's like you're selling. You're having a discussion with investor about your business and whether they might be a good fit to be an investor in it. So it's a conversation. A pitch deck is a tool to facilitate that. And it's really important you get this right, because a lot of people kind of go straight to their pitch deck and spend hours worrying and obsessing about getting this pitch deck right. Version 27.7, and they still haven't finished it. But actually what your pitch deck is there to do is to support you in the conversation that you're having with an investor. So my advice is that it's not really about sending your pitch deck out to everybody, because then you lose control of the conversation. Your pitch deck is something that you should use when you are face to face, whether that's on Zoom or in person in the future, to help you to facilitate the discussion rather than something that you just send to an investor and leave them to read it. You can always send a pitch deck to an investor after you've met with them. But the most important thing really is getting in front of people and actually talking to them. So please remember that. Don't hide behind a pitch deck. The most important thing to think about when you're thinking about pitching to an investor is really understanding your audience. It's always the same whenever you're pitching to anyone. Who is your audience? Who are you speaking to? And what do they need to know? And so when it comes to investors, what is the outcome that they are looking for? And it might sound obvious, but investors are looking for a return on their investment within a reasonable time frame. So they put their money into your business. In return, they get a share of your company. And what they're looking for is over a period of time, maybe 5 to 7 years, and it depends on from investor to investor, that they will then be you will grow your business to a point where it's worth a lot more money. You will hopefully sell it, and at that point, your investor will be able to take their money off the table, which means they get a return on their investment. And they're looking for really a return of about at least 5 to 10 times what they put in. And the reason for that is it's very high risk putting your money into startups. Otherwise, they put their money into stocks and shares or property or ISAs or whatever, where they can get a more certain return on their investment. So that's what they're looking for. But they're also looking for businesses that resonate with them, that connect with their heart. So they think about with their heads and with their hearts. And it's really important that you understand that when you're thinking about pitching. You think, how can I show these investors that they can make a great return on their money? And how can I also show them that if they invest in this business, it's going to make them feel good because they're going to be doing some good in the world? Those are the two things that they're assessing. So try and remember that. If anything, if you remember nothing else about today's presentation, remember that and think about that whenever you're pitching, whether you're pitching with a quick chat to somebody that you just met or whether you're talking through in a pitch deck. And when you're pitching to somebody, whether it's, again, in person, in a chat or with your pitch deck, it's really important that you can get across quite quickly who you are and what you do, and doing that with real impact. So I'm going to give you 2 examples here. When I ask somebody, if I meet somebody, who are you and what do you do? This is the kind of typical answer I'll get. So they'll say, oh, I'm an entrepreneur and I'm just starting this business. It's making really cool cycle helmets. They've got this amazing cool tech in them. And I really love cycling. I'm super passionate about that. And it's great because I can see they're enthusiastic. I get the sense of what their business does, but there is so much more that you can say in that space of time that will be more powerful and give you more impact. So here's another way that you can explain who you are and what you do when you are pitching. So I'm a serial successful entrepreneur that's building a market-leading cycle helmet business that's going to be worth 100 million in 5 years' time because we're revolutionizing the safety of millions of cyclists all over the world. Now let's break that down. At the beginning, you're talking about you're a serial successful entrepreneur. Now you might not be. You probably aren't. You probably never had a business before. But there is probably a huge amount of skills and experience that you have that has led you to start and build this business. So tell us about you and why we should listen to you. What are your skills and expertise? Why are you the right person to be building this business? Okay, so you can start with that, and don't hide your light under a bushel. Us women are terrible at that. We're like, oh, no, not little old me. No. We want to know why you're so great. Okay. Building a market-leading cycle helmet business that's going to be worth 100 million in 5 years' time. What you're doing there is showing your ambition, showing that you have a plan to be a market leader, that you have a plan that you're going to grow your business significantly over a period of time. Going back to what investors are looking for, that shows them that yeah, you could be aligned because you both have ambitions to create value over the next 5 to 7 years. So that shows your ambition and being really definitive. And you can adapt that to however makes sense for you. It might be that we're going to have 1,000 customers in 3 years' time, or we're going to be in 5 countries in the next 2 years. Whatever your ambition is, tell us what it is. And then the last bit, revolutionizing the safety of millions of cyclists all over the world. So here, what we're understanding is not just that you're making these cool helmets with cool tech in them, but the difference that you're making for your customers, the difference you're making in the world because you're revolutionizing the safety for your customers. And again, there's some ambition in here. Millions of cyclists all over the world. that's great, because an investor can then go, oh wow, this is a business that could be really big, and I want to get behind a business that's got huge potential. So you pack a real punch. So think about that when you're talking about yourself and your business. How can you really pack a punch in just a couple of, well, it's just actually one sentence, all right? So hopefully you can take some tips out of that. So let's look at your pitch deck in a bit more detail. So what does a pitch deck allow you to do? So it's more than just explaining your business. The first thing is it enables you to connect emotionally with investors. Really important that you can do that, because if you can connect emotionally, you're going to bring them along in your story. They're going to go, wow, this is really, I get this. I'm kind of invested in this. I want to know more about the story of this business. So think about how you can help the investor step into the shoes of the problem that you're solving for your customers, so that they really feel it viscerally, so you can connect emotionally. When you're pitching, you're demonstrating trust in the team. So it's not just about telling them who your team is, but when you're talking to investors, all the way through, they're making a decision. Can I trust this person with my money? And they're making that decision from the minute that they get an email from you, from the minute you get on a Zoom call with them, from the minute you start chatting to them. They're making that decision subconsciously most of the time. So all the way through, you need to be demonstrating that you are somebody that they could trust with their money to take this forward and build value in the business. Your pitch is an opportunity for you to show your passion. Your passion is so important, because as an entrepreneur, when you're building a business, you're going to hit loads of problems, loads of roadblocks. You'll probably end up pivoting your business 3 or 4 times before you kind of get it right. And your passion is going to see you a long way through that. So don't be afraid to show your passion when you are pitching to investors. Your pitch is also a tool that reflects your brand, and that's really important. So if you are a young, fun consumer brand, then that needs to really go through all of your pitch. You need to really see that in your pitch. If you're a kind of B2B, more professional services targeting corporates, then we would expect your pitch to be quite different, much more kind of professional and commensurate with your brand. So all the way through, making sure that, and that's not just about design, that's about the kind of words you use, the professional approach, the way you come across to investors. All of that needs to kind of sing with your brand. So your pitch we'll talk about content of the pitch in a minute, but the 2 sides to it are sort of showing where you've come to date and then showing where you're going next. And I want to just make this point so that you make sure that you spend enough time in a pitch showing the investor the possibilities of where this business is going, not just spending 90% of the time you have, or the real estate you have in a pitch deck, talking about where you've come so far. Investors want to know how well you've done so far with your business, but they're putting their money into your future. So do make sure you spend enough time showing them the future. If they put their money into your business, look where it's going to go, and get them excited about that. And getting them excited is really important. During a pitch and as you build through it, you want to leave an investor feeling excited. So your pitch is a tool that kind of will hopefully leave them feeling like, God, this is amazing. I'm really interested in getting involved. Fundamentally, you've got to show in your pitch how you solve the investor's problem. And again, just remembering that one thing I want you to remember, their problem is making a great return on their investment within a reasonable time frame, and also feeling good about what they're doing because they're making a difference in the world. So you've got to show that in your pitch. Your pitch is also an opportunity to make you memorable. Investors see thousands of pitch decks a year. I mean, it's ridiculous. Professional investors particularly, whether that's angel investors, so people who've got individual amounts of money, or whether it's institutional investors like venture capital firms, they see thousands of these things. So your pitch is a weapon, a secret weapon that enables you to stand out. And that's another reason why it's a real mistake to take a template that you've seen and then just adapt it for your business, because it's going to be like, the investor will be like, oh, I've seen this before, it's boring, right? How are you going to stand out? And the final point, really, really important, your pitch is there for you to make an ask. So what are you asking for? And assuming that's investment, you need to be really clear about that ask. If you don't make an ask when you're pitching to an investor, what is the point in even doing it? Okay, so those are all the things that your pitch can do for you. So let's talk about the content of your pitch, because there's quite a lot of things that investors want to know about. And again, even if you're really early in your business, it's really important to start thinking about all of these things, because you need to get a good handle on all of these elements as you grow your business, so that when you are ready for investment, you kind of got it nailed. Okay, so let's run through them, and you'll probably be familiar with a lot of this stuff. First of all, what's your vision? So investors really want to know, what's the big picture that you're building here? You know, where's this business going? Not just kind of where you are now, but where do you hope it's going to be? What's the vision? What's the problem that you're solving? So how are you, if you're not really solving a problem, my view is you probably haven't got a business. So what's going on for your customers that mean that they're looking for a new solution? Why would they buy your product in the first place? What's the problem? And it's no good just having kind of 5 people with a problem. An investor wants to know that this is a market that could be huge. So what's the size of the market opportunity that you're operating in? And I'm not looking, when you talk to investors, they don't just want to know, for example, if you're in the fashion industry, knowing the size of the fashion industry is not that interesting, right? Because it's too broad. But if you're selling, so for example, baby grows to affluent mums, again, don't tell me the size of the children's clothing market. Tell me how many new mums there are every year that have children aged 0 to 3. And tell me how many of them fit the demographic that you are targeting. Tell me what the kind of average amount of revenue is that you could get from each of those customers. And then you multiply the size of the market by the amount of money that you can sell to them. And that gives you a total market opportunity. It sounds a bit complicated, but this is about showing the niche that you're operating in, what the opportunity is, rather than the broader market, which is just kind of irrelevant, actually. What's the competitive landscape? So how else do people, before you came along with your solution, how else are people solving this problem? So for example, before Uber came along, how were people getting from A to B? They were getting black cabs, they were getting the bus, they were walking, they were getting a lift from their friend. What were the issues with those other solutions, which means that there's a gap in the market for something new to come in, like Uber, okay? That's what I'm talking about when we're looking at competitive landscape. So that's teeing you up. That's the story so far, which is kind of what's going on in the market. And then that tees you up really nicely to talk about your solution. And so investors want to know the headlines on that. They don't want to know the detail, because as an entrepreneur, we can get really lost in talking about our solution and going on. I mean, I do it myself, when I'm not being careful, is we just talk about our business because it's our baby and we love it and we want to tell you all about it. But what the investor wants to know is kind of, okay, just tell me the headlines. You told me what the problem is. Just tell me how you solve it. If there's 3 features to this problem, what do you, so for, again, going back to Uber, the problem with it, they're trying to solve is that, you want to call a cab with an app. You want to be able to do it with contactless payments, and you want to feel safe. So what Uber does is it allows you to book a taxi on an app. It allows you to pay with contactless, and it allows you, everything's tracked, so it's secure. It's that kind of, that's the level I'm talking about, is matching the features of the problem to the features of your solution. What's your competitive advantage? It's really important. So there are so many startups out there, and everybody thinks they're doing something unique, and many of them are. But get really clear on what your advantage is in the market, what makes you different, what gives you the edge, and how are you going to sustain that over time. So what's your sustainable advantage? Really get clear on this, because investors are going to want to know that. And for you as well, being clear on your own competitive advantage is super important, particularly if you're in a very competitive market like beauty or fashion, where there are so many players that you've got to really nail what it is that you do that's different. Who's your customer? So investors always want to know who are you targeting, and they want to know that you really understand your customer And of course, you should really understand your customer. So make sure that you understand that and can talk about your customer to investors. What's your business model? How do you make money from this venture? And that's not just your pricing. So it's interesting to know what your pricing model is, but that doesn't tell us how you make money. So if you're a product-based business, what are your cost of goods sold? You know, how much does it cost you to produce a product, get it from, package it up, get it from A to B, and what's the margin? If you're a service-based industry or tech business, you know, what are the economics that sit behind that? How many customers do you have to get before you break even? Those are the kind of the metrics that sit behind the pricing is much more interesting for investors to know than just kind of what do you charge. Route to market, how are you reaching your customers? So what are the headlines in terms of your marketing strategy? So are you going for social media marketing? Is it trade shows? Are you doing adverts on buses? Is it direct mail? You know, whatever, how you're reaching customers, investors want to know. And they, again, as much data that you have behind that as possible, the better, because they want to know the metrics. So they want to know, right, for example, if you're doing social media advertising, what typical cost per click do you expect to achieve? What's your customer acquisition costs? And knowing that in relation to what your lifetime value of a customer is really important, because we know if it costs you £10 to acquire a customer and you make £200 from that customer over their lifetime, that's a route to market that works, because the marketing costs are commensurate with the value that you get from a customer. Hope that makes sense. So knowing kind of why you're pursuing particular routes to market, really important. Traction. So traction is all about the progress that you are making, the proving that you have product to market fit. So the classic measurement of traction is revenue. So if people are putting their hands in their pocket and buying from you, that usually means that you've got a product that people want. So demonstrating that you've got growing revenue is really important, but there are lots of other metrics that you can use to measure traction. It might be that you've grown your customer base over the months and the quarters and the years. It might be that you've improved your customer acquisition cost, that your repeat customer base rate is getting higher, that your margins are getting better. So lots of those kind of key performance indicators, and the more of that you have, the better. And what you're trying to show investors here is momentum. So how are those numbers improving over time? And other things around traction that are useful to know, for example, like customer testimonials, any press coverage you've had, any awards you've won, that's all really good kind of assets that show that you are making an impact in your market, and investors really want to see that. The more traction you have, the less risk there is for investors to back you. And it's the biggest thing investors say is, come back when you've got more traction. It's really annoying. But what that means is, we're not sure that you've proved that the market really wants this yet. So that's your job, is to prove that the market really wants what you've got. Team, they want to know who the team is. So they need to know about you, but they also need to know any other key members of your team, any co-founders, any senior managers you have. But team can also include any investors that you already have. It can include any advisors that you have. And I think no matter how early you are in your startup journey, having an advisory board is a really good thing, because it gives you gravitas, it gives you more skills and expertise. Some of your team may be outsourced. It may be that you have a technical agency you work with, or a PR agency, and they're all important for the investors to know. They're looking to see, have you got the critical success factors covered? All the things that your business needs to succeed from a team's perspective: leadership, finance, operations, marketing, technology, whatever your business needs for success in your team, you need to show that you've got it. And if you haven't got it yet, how are you going to recruit it? Are you going to raise money to fill the seats on the bus? Okay. The promise. What are you promising to do with your business? So there's three things to this. One is, what are the key projects that you're going to be working on to roll out this business? So for example, in the next 3 years, we're going to grow our team with 5 new members. We're going to rebuild our website. We're going to invest in this stock. We're going to launch 4 new products. We're going to enter into 3 new markets. Those are the kind of headlines that investors want. Okay, if I give you this money, what are you going to do with it? So that's the first thing. Second thing is, now if you put those things in place, what do you expect to happen? So what results are you expecting to achieve? So again, we're putting these things in place, and over the next 3 to 5 years, we expect our revenue to double every year. We're looking to improve our gross margin by 50%. We're going to, acquire 5,000 new customers, and we hope to hit profitability in year 3. So those what are the measurements that you're expecting to see? And then the final part of the promise is giving investors a sense of what your exit might be. So, what we're hoping is in 5, 7, 10 years time, we're going to look to exit this business on a trade sale to a much bigger company in the industry. Or are you thinking that you might do an IPO, so put your business on the stock market? So just a sense that you're thinking about who might be interested in buying your company in the future, so that they can take their money off the table and get their return on investment. Deep breath, nearly there. So the 13th and final thing is the ask. So that's part of your investor offer. Investors want to know, how much money are you raising? What's the valuation of your company? And so how much equity are you offering? So what's the share of your business that you would give to that investor in return for the money they're putting in? They want to know if your business is SEIS or EIS compliant. I'm not going to go into that now because we haven't got time, but that's a really tax efficient scheme for investors. Most young startups would qualify, but type in SEIS, EIS into Google, go to the government website, and you can read all about that. So they want to know if you comply with that. They want to know, have you already raised some money some of the money you're looking for? If you're trying to raise £250,000, have you already raised your first 50? And who's that investor? Because that again de-risks it for them. They want to know when you're raising that money. So we're raising this money by the end of January. Being bold about that. So being clear. So there's lots of all of these things are stuff that investors want to know about. And quite frankly, these are things that you as a business owner and founder and entrepreneur also need to know about, right? So even if you're nowhere near ready to raise investment yet, these are the things that as a founder and business owner you need to be focusing on and thinking about, because trust me, at the point where you may decide to raise investment, that's what investors are going to want to know too. How are we doing for time? Oh, we're doing all right. Good. Right, let's move on to a bit about storytelling. So obviously you've got a lot of things that you want to tell an investor, and it's quite challenging to put it all into into a story. But if you ever get the chance to do a pitch competition or anything like that, you'll find that sometimes you get 15 minutes to talk about this stuff. Sometimes you get 5 minutes. Sometimes you get 3 minutes. Sometimes you might only have 1 minute. And actually, I promise you can get all of those 13 things that investors want to know about into a minute if you're really clever. But it's about telling a story. It's about telling a story. So what makes a story? First thing about a story, if you think about any good story you've ever heard, is that you're immediately hooked in, absolutely immediately. So if I'm telling the story about my business, Enter the Arena, which is all about supporting female founders, focusing on raising investment, I will often start my story like this. I'll say, did you know that only 2.7% of venture funding goes to female founders? It's like dropping a bomb. And you can't help but sit up and take notice, because you're like, oh my God, really? Jesus, that's terrible. Tell me more. That's what you want at the beginning, is something that makes people go, oh my God, I need to know the rest of this story. Think of it like when you see a magazine on a shelf. If you see a magazine on the shelf and it says Brad and Jennifer back together again, you'd be like, oh my God, I can't wait to buy that magazine, take it off the shelf, because you want to know, what's going on with the romance of the century. So what's your headline? What's your hook? And it can be a shocking stat. It can be something funny. It could be a question that you ask of an investor that relates to the problem that you're solving. But you're creative people, right? Because you're entrepreneurs, but think creatively about what you can do to hook them in. When you're telling a story, you don't have to tell them the beginning of the story. You can sometimes start a story with the ending, right? This is the end of the story, and now I'm going to tell you how we got to the end. Does that make sense? So hooking them in immediately, really, really important. A great story has a beginning, a middle, and an end. And if you think about those 13 things I've just told you, you don't have to tell the story in that order, but there's something about setting the scene around what's going on in the market. What's the problem that's going on here? How big is this problem? That kind of sets the scene to bring you into the middle of your story, which is like, and let me tell you how we are solving this problem. And actually, what great progress we're making so far and how much our customers love us. That's the kind of middle bit of the story. And then the end of the story is, so where's this going next? And look at all our exciting plans for the future. And the cliffhanger is like, and are you going to join us on this journey? So that's one of the ways that you can tell the story. So quite helpful to think about that kind of flow. When you're when you're pitching to investors and telling this story, it's so important that you keep it simple. The best businesses are the ones that have, I think, the most simplest ideas, where people kind of go, oh my God, why didn't I think of that? It's so obvious. It shouldn't be complicated. It should be easy for anyone to understand. And your pitch and your story, you should be able to show that to your granny and she'd kind of go, oh yeah, I get that. You know, because you have to assume that people don't have a knowledge of what you're talking about. So using fancy jargon or buzzwords, really irritating for investors, because we see it all the time. You know, don't put blockchain or AI into your presentation unless it really is fundamental, because buzzwords are kind of, investors see so much of it, they just want to ignore it really. So it's the simplest story where you kind of go, oh my God, it's obvious. And this business is obviously going to be the leader in this game that they're playing, this industry that they're going into. To relate it to keeping it simple is not putting too much stuff in. So if you, for example, if you're talking about the size of this market, you've probably got like 15, 20 brilliant stats about what's going on in your market, the size of the market, the behaviors that are changing, all that kind of stuff. If you try and put all of those into a pitch, there's going to be too much information to remember. And really, so I would encourage you to pick the most important 3 things, because it's really hard to remember much more than that. I know that's slightly ironic. I'm giving you 5 golden rules here rather than 3, but three is the sort of maximum, I think, in terms of what you want to focus on. So if you're talking about customer profiles, maybe pick your top 3 customer profiles and say, these are the 3 customers that we really go for. Actually, even better if you can nail it into one thing. So when you're talking about why your solution is so great, it's so great because it's this, this, and this. There's something about 3. Whereas if you're like this, let me tell you about the 10 benefits of my product, the investor's just not, it's not gonna log in their brain. All right. And then finally, what do you want them to remember? And they're not going to remember much. And you know, as I've been telling this story, the thing I want you to remember is to really understand who your investor is and that they're looking for a return on their investment. That's the thing I want you to remember. So what do you want people to remember about your business? And there's this old adage, you've probably heard it. You tell people what you're going to tell them, then you tell them, and then you tell them what you've told them. So wrap up again at the end, you know, tell them what it is that you want them to remember about your business and why it is such a great thing for them to invest in. When it comes to design, so don't go straight for design on your pitch deck. Get your story straight first, get your narrative right first, get the flow of it right first, and then think about, right, what slides do I need to support what I'm trying to say? That's not about not hiding behind your deck. You can get really lost in PowerPoint, but when you're doing a pitch deck, don't make it too complicated. Keep the copy minimal. Don't have lots of writing, things that people have to read. Keep it bullet points, icons. Because if people are reading a slide as you're meeting with them, they're not looking at you, they're not listening to you, they're too busy reading. Think about the titles of your slides. So instead of having a slide that is entitled problem or solution or competitors, tell me actually what that's the story of that slide. So instead of saying problem, I could say only 2.7% of funding goes to female founders. That's the problem. You know, you put the actual problem as a header. So if all you did is read the titles of your slides, you get the story. Okay, make them meaningful. Diagrams, pictures, graphs, tables is a really good way of getting complex information across quickly. And again, a graph of your financials, probably a lot easier to see than a table. You can use proper spreadsheets and things later when you're discussing in more depth, but when you're pitching, just keep it simple. And again, photographs, illustrations really bring your pitch to life. I mean, even things like if you've got a 1-minute kind of video explainer of how your product works, just chuck it in. Does the job for you. 30 seconds, brilliant. You know, if you've got customer testimonials and you've captured them on video, say, here, let me show you a customer testimonial. You play it. I mean, it doesn't have to be two-dimensional, so try and bring it to life. And it all helps you keep it engaging, exciting, it helps make you memorable, shows your passion. So I encourage you to be creative with your pitch decks, because it will engage your investors a lot more than if it's just a kind of death by PowerPoint type thing. So to wrap up before we do Q&A, I really want to nail this point, right? A great pitch deck isn't enough on its own. And I hear this a lot. A female founder says, it's fine, I'm ready for my investment, I've got my pitch deck. I'm like, okay, great, but that's only one piece of the puzzle. Let me run through the critical success factors if you're looking to raise investment from investors. So you've got to have a great business. You've got to have great company potential. And that's really important. You can have a beautiful pitch deck, but if you haven't fundamentally got a business that's ready for investment, you're kind of wasting your time. So the first step is to make sure that your business is investment ready, that you're proving enough traction with your business that investors would feel confident that the market has got wants what you've got. Okay, so that's the most important thing, is checking that your business is investment ready. You then need to get your commercials right. So you need to have really good financial forecasts that show what you expect to happen over the next 3 to 5 years with your business. And along with that, you need to get a really good sense of, you need to get it right in terms of how much money you need to raise, what the valuation of your company is, and what your strategy is for fundraising. Again, there's no point in having a great pitch deck if you haven't got all of that right, because if your valuation is way off, or you're raising too little money, or you're kind of wasting your time. So pitch deck kind of fits into the communication piece. You've got to have a stellar pitch deck, but also really great communication skills generally to be able to connect with investors and send them the right emails, and to be able to talk with them effectively and speak their language. So it's more than just a pitch deck, it's much broader than that. Great, so you've got a brilliant business, you've got your financial forecast, you've got an amazing pitch deck, you're really set, but next you have to be able to connect with the right investors, because again, just having a great pitch deck and not sending it to the right people, you're not going to raise investment. So you've got to connect and attract the right investors who are going to add value for you, that are going to be a good fit for you. And you've got to know how to reach out to them and run your fundraising campaign effectively. Otherwise, I'll still be speaking to you in 2 years' time. You're like, yeah, I've had hundreds of conversations, but it's gone nowhere. Probably because you're speaking to the wrong people and doing it in the wrong way. You've got to understand how to get commitment from investors. So brilliant if you can get in front of investors, but you need to know how to run a really good meeting with an investor and how to get them to commit to investing. And then you've got to be able to negotiate your deal. So that's the kind of almost final piece of being able to be successful in raising investment. And layered across all of that is about your confidence. To be able to raise investment, you've got to be confident, because investors, if they see that you are confident, they will be confident in you. And again, it's that whole question of, can they trust you with their money? Do they believe that you are a great leader, that you have the ability to recruit great people to come along with you, that you have the ability to sell this to your customers and build a business that can scale and give them a great return? So there's lots of factors. This is not about trying to put you off thinking about raising investment. It's just to make you aware that there are a number of things that you have to get right. So finally, before we hand over, I'm going to come back to Emma, who's going to kind of lead the Q&A, but just to make you aware of, if you do want any extra support in the future, when you think about raising investment, go and have a look at enterthearena.co.uk. You've got lots of support there for female founders, lots of free resources that you can check out. It's really loads of helpful stuff. But a couple of things I want to make you aware of. One is, if you want to have a one-to-one session with me, then you can do that. It's called a discovery session. It's 90 minutes. And that can be a brilliant place to start if you're just not sure about whether your business is investable, how to go about this whole fundraising thing, what the things are that you need to do for your business. That is a really kind of easy way to start things. if you want support, if you're ready to raise investment and you want to go for it and you want proper professional coaching and support as you do that, then we have a fundraising academy, which is the one on the right. So it's 3 months where we're there to hold your hand through the process and give you the very best chance of success. The middle one, investment ready program, if you're not quite there yet, if your business is kind of almost ready, but you want to make sure that it's the very best it can be before you go out and raise investment, then the investment ready program is the one. It's a 6-week course, and that is about really tweaking all those 13 things that I talked about, making sure that you've got your value proposition right, that you've really nailed who your customer is, that you really understand who your competitors are, all those bits and pieces before you start a fundraising campaign. We're full up for January now, but the next one of those will probably launch in the spring. So those are all things that can support you, but do go and have a look at Enter the Arena. Right, let me stop sharing my screen and come back to the lovely Emma, because we've got 20 minutes for questions.
Julia, and I really that was awesome.
Right.
That was brilliant. So, I wish I'd known you about a couple of years ago when I first started doing all these things. It would have made my life a lot easier. So that was really, really good. Thank you. Right, so we've got a couple of questions in already. Guys, if you want to also chip in, let us know what your businesses are and what you do, and because we've got connections throughout the Sistr group as well that will probably be able to help you. So use this time as well to pick Julia's brains and flag things up. But as a first question from Michelle. Hello, Michelle. A new startup raised 3.5 million for a seed round, and they've sort of come out of nowhere, and they've got an amazing consortium of VCs. So how did they do it, do you think? I mean, that sounds like someone with a great network.
This is brilliant, and it's when you look at it from the outside, you think, how the fuck did they do that? They've raised appeared
out of nowhere.
A lot of investment off the back of what you think is off the back of a fag packet. The chances are there's probably a hell of a lot more going on behind the scenes than you might realise. So it might be that the founders, I mean, I don't know, but it might be that the founders of that business are serial successful entrepreneurs that have been there, done this before, got the t-shirt. And so investors will back them at an idea stage. Sometimes people can raise money really early on if they've got an incredibly compelling idea in an incredibly compelling market, but it's quite rare. Most of the time that kind of size raise with a consortium of VCs, 3.5 million, comes once a business has already been doing quite a lot behind the scenes off their own steam. So it's quite hard to comment, but it doesn't happen that often. And I think the reality is that very rarely can you raise that kind of money before you've even done anything with a business. Usually there is a minimum viable product that's been built behind the scenes. There's been a lot of pilot testing. Those entrepreneurs are super experienced. And it may be that they work, but being well connected isn't enough. You can't just have great connections and then they're going to throw money at you. You've got to have something really bloody compelling to raise that money before you've built anything. So it's rare.
Michelle, can you pop in the chat who it was? Because I'm a bit curious now. Anyway, we've got, I don't know, is that Mac MC has asked how long your pitch deck should be.
So a pitch deck, in terms of the slides, I would try and keep it to sort of 10 to 15 slides, maximum 20. There's not really a hard rule, but it's more than that. You're probably not telling the story in a really succinct way. And when you're pitching to an investor, I mean, because it's a conversation, actually a good pitch to an investor should take an hour, because they want to ask you lots of questions as you go along. If you're just doing it straight, I mean, it depends on the environment. Very rarely would you actually sit down and do a pitch to an investor and then kind of sit back and wait and see. It should be a conversation.
And is that quite typical for an investor meeting, about an hour?
Well, I mean, the last time when I raised investment for my last business, when I got my first VC on board, and they put in $500,000, I went in expecting it to be a 45-minute meeting, and I was still there 3 hours later.
That's a good
and they
thing.
phoned back the next day and said we're in. So I think that's a good sign. It depends. Half an hour, 45 minutes. If you get more than that, brilliant.
That's a good sign.
Good sign, yeah.
Cool. Okay, so who in our company should we bring together to the pitch session? Okay, so should it just be the founder and the co-founder, or is it helpful to bring in other members of the team?
Depends. I mean, I think, again, it depends on what the environment is, who you're meeting with. I mean, I always think, my view is the first one, just you the founder, it should be fine. You need to show that you know enough about your business. Some people take their finance person along if they're nervous about the financial stuff. I just be careful on that. Make sure that you do know your numbers. If you're always deferring to your finance person, is that enough? Maybe for subsequent meetings. But if you're co-founders and you work together nicely and you complement each other, it can be nice for the two of you or the three of you to go. It's up to you how you like to work. Sometimes you've got founders where one of them is really strong on the kind of pitching stuff, the other one is a bit more shy and introverted. Don't force them to be there. There's no hard and fast rules about that.
Okay, that's good, because we keep hearing as well, and it's very true, is that some people play to your strengths, basically. Some people are good at something, some people are just not. So there's no point making them do it and dragging them along if they don't definitely need to be there.
Yeah, no.
Okay, so for the narrative, do you think, starting off with a question for investors, have you ever experienced XYZ, is appropriate? That puts them in the right sort of position, doesn't it?
Absolutely. I mean, with my last business, which was a fashion tech company where you could design your own shoes, I'd go into investor meetings and I'd get the shoes out and I'd put
love this.
I'd put the box of shoes in the middle of the table, which was beautifully wrapped with a pink ribbon, and I'd get the investors to open it, and the packaging, all the little things that came in it, and see this beautiful pair of shoes. And of course, they were all male investors, so none of them would buy high heels. But I'd say to them, so how many pairs of shoes does your wife have in the cupboard? And it would always get the conversation going, because they go, oh my God, she's got hundreds of pairs of shoes. So how many pairs of shoes does she actually wear? Oh, maybe a couple. Why doesn't she wear the other ones? Because they don't fit, because they're not right. Right, there, that's the problem. Because, and that would start the conversation. So it made it very relatable. It made them think about the problem. It helped them to feel the problem viscerally. So totally connect. Have you ever is a great way. Have you ever is a nice way. And also, I love the word imagine. Imagine if, I'm trying to think of a good example. But think about your business and imagine if you didn't have that, or imagine if you could. Imagine if you could do that. How amazing would that be? Imagine pre-Netflix. Imagine if you could sit on your sofa and with a flick of a button order any film that you've ever wanted.
That's so fun. I was talking to my dad about that yesterday. Like, do you remember video shops? Can you imagine now going to a video shop and being told, sorry, we don't have any more copies of that left, and now we've got Netflix? It's like, that's just amazing. Someone had to pitch that one day.
Yeah, exactly. So you're helping them to picture it, which in the emotional connection is what allows them to really engage with the story.
Thank you very much. Okay, so another question. What are the common questions investors usually ask?
Oh, God. Well, there's so many, but those 13 elements that I mentioned there are the key categories. The key categories of the things that investors want to know about. That's the thing, really. So they want to know, who are your customers? How big is this market potential? But the other things they want to know, which weren't included there, well, for example, where do you see the risks in this business? What else might they ask? What are the different, what are the different strategic options you could take with this business? There's so many questions they could ask. I'll tell you what a good thing is to do is to sort of get a piece of paper and write down the 20 questions that you're dreading an investor would ask you.
Yeah.
Just get oh my God, please don't let them ask me this, right? That's going to be the one they ask you. So prepare for that.
Because you can do your own kind of due diligence pack, really, can't you? Which is exactly that. Like, you list out all of your questions, make sure you've got an answer for everything, and then it doesn't matter. You're not going to get tripped up then, because you'll have it in the back of your mind. So,
and practicing your pitch on people that don't get your business. Practicing with somebody who can give you some professional support to guide you through it, and then starting with don't go out and pitch to your top perfect investor first. Maybe go to your third tier level investors, get a bit match fit before you go for the one you really want, because then by then you'll be really on form.
You kind of almost want to grandparent proof it as well, don't you? If you could explain it to your grandma,
Yeah.
I'm assuming not everyone's grandmas are tech savvy investors, for example. So if you can explain it to them and they understand it, then it's great, because nothing in it is being left up to like, oh, I don't really understand what that is, without any extra knowledge. And it's not to say that investors are stupid, because obviously they're not. They see a lot of stuff, so they need to get it quickly rather than have to dig through the detail. Okay, so what are some good ways of ending a pitch?
Okay.
With a sort of jazz
Well, I think, again,
hands.
if jazz hands. Well, I think again, if you are, I always think a pitch should be in person with an investor. So the perfect way to end a pitch, in my view, is to say to the investor, so what do you think? Would you be interested in investing in my business?
Boom.
You know, because if
To
you
the
don't
point.
ask that question, how do you bloody well know?
Yep.
And they might say, you know what, yes, I am. They might say no. And then you need to find out why it's a no. More likely they'll say, I'm not sure, maybe. Okay, what questions have you got? And then you get a discussion going, okay? But fundamentally, please ask them that question.
And we actually covered it yesterday in another webinar, but it's to get that answer quickly. So you don't want to be kind of wondering for ages and ages, like, oh, are they a maybe? Are they really a maybe and they haven't decided, or they're just being polite and they don't want to say no? Like, you just want to move on.
They hardly ever say no, because they've got a massive FOMO, fear of missing out. They'll keep you dangling. They'll lead you up the garden path. You'll have several, you know, God, it's just such a waste of time. And the problem is, as founders, we have happy ears, right? We hear a kind of maybe and we think that's a yes. So we kind of go, oh my God, I've got this investor who's really interested. I think they're going to come in. It's like, no, they're not. They're just keeping their options open, right? So that's a really important point. You want to get a firm yes, a firm no, or if it's a maybe, a contingent maybe. It's like, yes, okay, but what would make you say yes? So if maybe when you get some more traction, what do you mean by that? What traction would you like us to be delivering for you to say yes? And you've got to nail them down and then keep them warm in the background, but don't count on them. They're just warm in the background while you're trying to find the perfect investor who's going to say yes.
Yeah. Okay, so I love all these questions that are coming from MCMC. Don't know how to pronounce it. Well, it's a cryptic name. Okay, so referring to your fashion pitch, do we need to bring physical products to a session to pass to investors? Does that help? I mean, it's not hard and fast rule, but you found it helped.
You know, show, don't tell. Show, don't tell. If you've got product to show, show it. If it's not a sort of physical product, I mean, I said before about, you know, a little video explainer can be great, because it's really hard sometimes to explain some products. But if you've got something that you've already made, you know, show them that. Show customers using your product in action, a little video. But yeah, it helps it bring it to life. And you can send it to an investor in advance, or if you're able to get, you know, through the post, or if you're able to get to them in person, bringing it along. Yeah, absolutely.
And it's more memorable that way as well, isn't it? Because again, they see so many things that if there's some way that you can stick in their brain, it's going to be helpful. Yeah. Michelle, your process looks amazing. I mean, yeah, having a friendly version for warm leads of a pitch deck, and then another version for people that you don't know. This is a really good example of knowing who your network is and who to approach.
So you need a more friendly version for warm leads. Yeah, I mean, never, you know, I totally agree. I mean, you don't send out your pitch deck to anybody. I don't think it's just there as a tool for you. You may not even need one. If you're comfortable talking about your business with an investor without having supporting slides, then fine. You do find though that some investors will say, "Thank you very much. Could you send me your pitch deck afterwards so I can go away and have a look at this and digest it?" You know, that's something quite useful. An exec summary doc. Yeah, that's almost like, I mean, I prefer a kind of 5-page teaser deck than an exec summary, because I find a lot of exec summaries really boring. It's like a one-page Word document, it doesn't excite me. Whereas 5 slides, beautifully designed, brought to life with a little video, that's more interesting, and it shows your brand.
So is that what you do when you're kind of trying to tee up investor meetings? Would you send them like a 5-pager and never send them the pitch deck unless they asked?
No, teaser deck. Use a pitch deck to walk through the opportunity, just to sort of show them things that it's hard to say. You know, if you've got an operational process that you need to explain, it's really hard to talk that through. Sometimes you're like, look at this diagram, this is how it works.
Yeah.
You know, look at these pictures, that's the profile of my customer. It helps to bring it to life a little bit. Yeah, and the data rooms, that's a good idea, Michelle. So you created 2 data rooms with links with your stuff, and that's great as well. Yeah, it's good. What other questions have we got?
So after the session, do we need to follow up, and what are the best ways? I would say yes, but
yes,
expert lady.
After a session with you mean in terms of a pitch? Yeah, I mean, again, hopefully by the end of that pitch, you've got a yes, a no, or a contingent yes. So the follow-up should therefore then be more of a kind of, it was lovely to meet you yesterday, I really enjoyed what you said, thank you for that feedback on this point, I'm taking that on board. I'd love to stay in touch with you as we go through our investment campaign. You know, you should always follow up after a meeting. I think it's nice just to recap on what was said. Hey, and listen, if they said yes in the meeting, send them an email saying, just to confirm your interest, you agreed to invest X amount at this valuation, please reply yes.
Sign here.
You know, always follow up. It's polite, keep them warm, keep them in your database.
And even if it's a no, you can follow up, can't you, and just sort of keep them.
Thanks for your time, really appreciate it. I know it's not a good fit for you. You know,
do you know anyone else?
Do you know anyone? Yeah, I mean, I think asking for referrals, you've got to play it carefully, because if they said no, quite a lot of time they said no because they don't think it's a good investment opportunity. So if they don't think it's a good investment opportunity, they're probably not comfortable passing it on to other people. But if their no is very clearly, look, actually, I think this is a great business, but I do not have any expertise in this area, and I'm really not the right person. Then, of course, you could say, well, actually, do you know anyone who this might be a better fit for? But just watch out for asking for referrals when the no is because they don't think it's a great investment.
Yeah.
No.
And we've got another question of, do we show our accounting statements during the pitch? So how much detail, how much how much variance do you show?
Investors want to know the headlines about, you know, what you've achieved so far and what you expect to achieve in the future around your revenue, your profit, your costs. In terms of the really detailed financial forecasts or detailed accounts, it's unusual in a first meeting to go through that. But have them to hand in case they want to go through your forecasts in a lot more detail. But usually that's something you might have on a follow-up meeting, and something that you should share only when you feel comfortable. The detailed financials, I think there is a good case for saying, actually, we're happy to share that, but that needs to be under a non-disclosure. And maybe you don't send it to them, maybe you just talk them through it in person rather than giving them the document, because you don't know where it's going to go. So yeah, I think not necessarily in your first encounter with an investor.
Yeah. Okay. I think that's all the questions we've got. Has anybody else got anything that they would like to ask now? Anyone want to give any information about the businesses they're in? I'm just a bit curious because I know that Michelle, you're doing a fitness thing for
coronavirus. In coronavirus times,
yeah.
Looking at pictures presented on Loom or other visitors. I don't know about Loom. You mean Zoom or Loom? Whatever it is, I mean, there's the incredible amount of deals being done this year where the investors have never met the founders in person. It's just been done. I mean, I have, in terms of the process that I teach for the founders that I work with, I've always taught to try and do as much of this online as possible, because it's a really efficient way of meeting lots of investors and stop wasting time traveling and having coffees and all that kind of stuff. So yeah, absolutely, you can do this using technology. Yeah, for sure. Loom. Okay, Loom. Don't know that one. I'm going to check out Loom. Yeah, but Zoom, Skype, whatever makes sense. You know, it's all fine. It's all fine.
And it's the new normal, isn't it? Like
the new norm. The new norm.
We're all happy with that now.
It's been lovely having you all in the session. So if you want to connect with me on LinkedIn, please do. Just type my name in. I don't need to share the link because I'm the only Julia Elliott Brown on there, I think. But could you, if you do that, could you just put a little note attached to it, just so that you know, just say that you were on the Sisters Masterclass. Then I'll know who you are. and I'm sure Emma, you share my details
I
as
will
well with
indeed,
everybody.
yeah. So I'll share Julia's details. We'll also have a tip sheet that's going up on the Sistr site, and this recording will be available on Sistr YouTube and the Sistr website. So if you've taken lots of notes, or hopefully you haven't taken lots of notes, because you can watch the recording again later. And if there is anything that you need, get in touch with us at Sistr and with Julia. And thank you very much for joining us today.
Pleasure. Have a great
We end it there.
weekend. Yeah.
See you,
guys.
everybody. Bye
Bye.
bye.